For more on finance, James Gerrard from the website financialadvisor.com.au joins us now from Sydney. Good morning to you. Let's talk about this minimum wage increase. What did you make of it all?
Yeah, good morning, Lisa. It was great news for the 2.6 million Australians who are on the minimum wage. The Fair Work Commission increased the minimum wages by 3.75% starting from 1 July as part of their annual wage increase. So what that means is for someone who works full-time on the minimum wage, that's an extra $33 per week in income. And that means a lot to thousands of Australians. That could be the difference between being able to afford their child's swimming lessons on the weekend or getting the money together to pay the annual registration on their vehicle.
The union wanted more, yeah.
Yeah, the unions wanted more, and there's actually good reason for that. When we have a look at the inflation rate, which is 3.6% in Australia, it looks like on the surface a win for minimum wage workers at 3.75%. But when we drill down into the numbers underlying inflation and some of the areas that minimum wage workers spend on, it tells a different story. So, for example, transportation costs have increased by 6.5% over the past 12 months. Food costs have increased by 7% over the past 12 months. And rental prices in capital cities around Australia have increased by 13% over the past 12 months. So on one hand, you have some saying that the wage increase wasn't enough, but then on the other hand, you have the small business sector saying, hey, you know, we've got tough trading conditions at the moment, and this is difficult for us to absorb. So on balance, I think the Fair Work Commission made the right decision at 3.75%, but arguably they could have maybe gone a little bit higher.
Hey, let's talk about the end of tax year. What have you got for us? What do you reckon we should be thinking about?
Yeah, we're approaching the end of another financial year, so tax planning now. There's a few things that people can think about. It's a little bit unique this financial year because we're moving through to the stage 3 tax cuts from 1 July, where most people will pay less tax next financial year. So the name of the game when it comes to tax planning now is to look to bring forward tax deductions to this financial year, because you'll save more in tax with deductions this year than you will from next financial year. So there's a few areas that people can look at to reduce their taxes. The first is topping up on super contributions. The pre-tax super contribution, known as the concessional contribution cap, is $27,500, and people can salary sacrifice to top up to that cap. But they just need to remember that employer contributions are also included in that cap, so you need to add both of those together to make sure you don't go over the cap. And then a couple of other areas that people can look at as we move towards the end of the financial year are donations to charity. If you've been meaning to do that for a while, now's a great time from a tax perspective to make some donations, and also work-related deductions. So things like, do you need to buy new uniforms for work? Do you need to pay for dry cleaning? Are there any education expenses that you can pay for work? Now's the time to be considering those to claim the tax deduction this financial year. And
of course, we tell everyone all the time, James, that they should get their own financial advice. These are just tips from you just to make sure that we're making that super clear. Now, even though we've been talking about the cost of living crisis and minimum wages, there still seems to be a lot of people who are itching to get on a plane and go somewhere. I noticed that the Aussie dollar back then, I just now said that it was 66.9 US cents. So it's creeping up a little bit. If you did have the funds to go overseas, where would you go at the moment, do you reckon?
Yeah, a lot of people haven't travelled for a number of years since COVID occurred, and with airfares starting to come down now, people are starting to consider where they should go. So I've got 3 places that people can consider to travel around the world where the Australian dollar is quite strong, so you sort of get good bang for buck. The first place is Turkey. Their currency, the lira, has depreciated 50% against the Australian dollar over the past 12 months. The second place is Argentina. Their peso has depreciated a whopping 275% against the Australian dollar. In both those countries, they're experiencing tough economic conditions with high inflation and high unemployment, and that's led to their currency depreciating against major currencies such as the Australian dollar. And the last place, which is closer to home, where the weather's about the same, maybe a little bit warmer depending on where you live in Australia, is Japan. We've seen a 70% increase in Australian tourists year on year going to Japan, and that's partly because the Japanese yen has depreciated 10% against the Australian dollar. So if you don't mind a bowl of ramen, or if you're adventurous, a bit of sashimi, well, Japan is the place for you to be travelling to.
James Gerrard, thanks for joining us this morning.
My pleasure as always. Thanks, Lisa.
Going to book your flight to Buenos Aires?
It did look nice, didn't it?